Good afternoon, everybody. A very, very warm welcome back to howtotrade.com and welcome to our US Open stream for this afternoon over here in the UK. And for those of you in the US, you're probably just waking up and looking forward to getting stuck into your trading day. So welcome. I hope everyone is doing well. I had a good day so far, and looking forward to how we're going to get some nice indices action into this afternoon after what was a really interesting day yesterday, off the back of not really anything as such. Oil prices were down quite heavy and the stock market was dragged lower as well, and the dollar spiked a little bit higher. A few people asking me why. Was there any fundamental reason behind that? I would say not really. We had a pick up in the volatility. It's a new month. It's a new month of trading. And that sometimes is just how it went in that day. There's nothing really else to say on that. If you are around across our YouTube, Facebook, LinkedIn, Twitter, or in the trading room, feel free to pop up and say hello. And if there's anything you need me to answer for you, then again, I'll be more than willing to do that. We did have a live Q&A session earlier this morning, but our other analyst, Shane, is on holiday for this week, so that's probably why you've only seen me this week. He'll be back next week, don't worry, and I'm covering a couple of extra streams just to fill in some of the gaps. And so yeah, earlier on we did that Q&A series, which was good. A couple of questions which sort of overspilt past the stream, which I'm happy to go through in this stream as well. But anytime that I stream, really, it's always a Q&A. If anyone has any questions, anyone knows, you're more than welcome to ask me. Golfer, hello, good morning from the US. Hello to you from the UK. Hope you're doing well. Thank you for the message. Probably gonna have a few different people on my stream. For those of you who don't know, I normally come on in the morning. So for those of you who are in the US and seeing me maybe for the first time, it's probably because you're not awake when I'm streaming normally, which is fine. So for today, we've got 5 minutes to go until the US Cash Open, and that's typically when we start to see the volatility around the stock market, and hopefully we can get some more of that today. So it's not going to be a particularly long stream or taxing or anything like that, but hopefully we can find some decent stuff. Now, if you just head over to our trading calendars, hover over resources on the howtotrade.com website, head over to trading tools, and then when you scroll down you can see our economic calendar. Always have a quick look through this. I spoke about it in the stream earlier on, so sorry if I'm repeating myself if you've been on the stream, more than one stream of mine today, but we have got the Bank of Canada interest rate decision in just 19 minutes time, so that's going to be, quite a volatile one for the Canadian dollar. It always is. It's an interest rate decision from a central bank. It's our first one of September. It's our first one out of these new sort of sets of decisions, and everyone's expecting really this to be the new norm. Cut of 25 basis points, 4.5% previous interest rate down to 4.25%. Again, just to quickly remind you all, a trade idea that I posted in the trading room yesterday at howtotrade.com was on USD CAD. It's the last post I posted. I'm long on USD CAD. I managed to get 1-to-1 basically from this demand zone, and I'm hoping we can get a little bit of a push higher. So we'll see how it goes with the interest rate decision. Hopefully we can get some good things. Golfer says he follows me originally from the UK, moved to the US 2 years ago. Great content. Thank you very much. That means a lot. And even when you've moved over to a different time zone, you're still managing to tune in. So I do appreciate that. And thank you. And welcome to today's stream, of course. What else have we got to talk about? We've got 4 minutes to go until the US Open. I've got my Bloomberg on behind me. I like Bloomberg when the US Open comes. They sort of ring the bell and all that sort of stuff. So yeah, over to the stock market, and then after the bells, after we've been open for a bit, I will go through some of the requests from earlier on. Excuse me. Hello to you, Matthew, by the way, and hopefully you can get that EA working for you. So here's a little bit of an idea that I've got on the Nasdaq at the moment. So on the daily time frame, I've drawn a Fibonacci retracement from the swing low down here up to the swing high up here. Okay, that's my Fibonacci retracement for this at the moment. And I'm just experimenting with using Fibonacci's with supply and demand, or order blocks / FVGs or imbalances, whatever you want to call it. Because I'm predominantly a smart money trader, right? And you can see, keeping it nice and simple, what I call the golden pocket, which is between 382 and 0.5, the golden area being 0.5 to 61.8. When we're in a strong bullish market, which the stock market typically is, we can utilize this 38.2 to 0.5, this golden pocket area. And I noticed something. Oh, I clicked off of it. I noticed something when I came on the stream earlier. I'm sorry if there's a lot of colours here, but basically what I noticed was this daily candlestick imbalance, basically, that was situated between this wick here and this wick here. So there was an imbalance of buyers and sellers. And those of you who understand smart money concepts may also call this a fair value gap. And really, I was looking to execute a trade just personally, and you can see when I turn on this smart money concepts indicator, you can see it marks that, and it actually marks the 50% for you as well in this little green line. So really what I'm looking for, and I nearly got the entry this morning, is a push down into this 750 area. And the stop loss is a little bit difficult for this one. It always is when you sort of try and enter without any sort of low in sight, because I'm not interested in putting it down there because my risk reward will just be rubbish. But I'm happy to put it sort of just below the 18,500 mark, somewhere like 18,483, and targeting the top here gives us a 4.5 to 1 risk reward trade. And if I'm wrong and we come smashing down past the 61.8, then maybe room for a bearish month. But I've not seen enough evidence just yet to suggest we are going to get that bearish month, should we say. But it might come. We've got 1 minute to go. Let me just quickly dive down onto the 1 minute time frame. And I have to say, that is my favourite piece of analysis on the stock market for today. It's the one I really wanted to share with you before the US Open started. And as you can see, 1 minute to go. Let me just quickly... You'll notice probably quite an explosion of volatility after that bell opens, which is in 1 minute time. Watch the next 1 minute candle. Here we go. Let's have a quick look as well at the US 30. You can see it's just starting to move now. Lots, you get an initial spike of volatility. Look at the US 30, a lot more volatility than the likes of the Nasdaq. Let's have a look at the S&P 500. And just by the way, a really interesting day we had. Here we go. We're starting to get that move now. We had a really interesting day yesterday. Sort of what was it? Over 2% down day. A 3.38% down day in the Nasdaq yesterday. Really off the back of not much at all. So I really like this play, to be fair. I like this play from the 50% of the imbalance. I'm not going to lie. I'm going to see if we can get that filled off the back of the US Open. It's not looking like just yet, but you've got to give it some time. It's only really just woken up. Let's have a look at the Dow as well. Just a bit of analysis on the Dow. Again, yesterday it retreated really from a much different area to the Nasdaq. Nasdaq was all the way quite significantly below its all-time highs. But the Dow Jones showing the true strength, which shows to me that the weakness at the moment is in the tech sector. That's why the Nasdaq's fallen off. But again, another quite sharp reaction from these all-time highs. But similar sort of thing, really. What I'm looking for is, if we do get a deeper retracement in the Nasdaq, really I'm looking for a similar sort of play, the Fibonacci retracement into our golden pocket and into this this fair value gap in here. It pretty much is a textbook carbon copy of the Nasdaq play. Something like that. 40,200 I think could be really nice support. Alternatively, if you're someone who likes to trade order blocks, if I just turn on my indicator, Just want to check if that one up there is. It's not quite. Then you have got an order block down here, which still sits within that golden area at 39,800 if you fancy a little bit of a deeper retracement. So both of those, I think, could act as good support areas. Good afternoon to you, Jerry. Hope you're doing well. Haven't forgotten Jerry's question from earlier. I haven't. Don't worry. He wants me to show him about Fibonacci's and how we draw them, and I'll do that for you after. Dragon131, good morning, Connor. Earlier, I enjoyed your stream, thank you, especially when you were talking about Mark Douglas and journaling. I've been using these with the Piranha, and last month grew my account by 3.2%. What do you consider a good monthly goal? I would consider a 2% gain in the month as a good month. So you've done really, really well there. If you can do that consistently, 3.2%, then you're doing fantastically well. It's probably unlikely you'll be able to do 3.2% every month, but a really, really good month that is 3.2%. Absolutely nothing wrong with that at all. The way that I always compare it is if you look at the average index fund return, what is the average index fund yearly return? The index, so the S&P 500 has annualized an average return of 10.26% since 1957. On average, of course. Sometimes it's much higher, sometimes it's much lower. And so I always say to myself, if I make 2% per month, then that's 24%. I'm over doubling the performance of the S&P 500 on average in the last 60 years or whatever, 70 years. And therefore, I say 2% in a month is really, really good. Anything higher than that's amazing. Even 1% is not too bad. So that's where people's expectations sometimes are too high, in my opinion, because people will turn their nose up at that. But if you can become capitalized, if you can get a good amount of capital behind you, if you can make a 1-2% per month, then you are doing well. And remember, it's about consistency and longevity. It's about doing that on a consistent basis. You may have months, I sometimes may have months where I'm down 4%, and then the next month I might make 6, and then I might be down 2 or 3, and then I might break even. But over across the year, I hope to be at least in that 15-20% bracket in terms of my total profit. Okay. Have we got any closer to my entry, or are we spiking higher, which would be really frustrating? Looks like we spiked a little bit high off that US Open. I'm not really surprised because we have fallen sort of 4% in just the early part of the week. I'm interested to see if that gets reversed as we head into the rest of today and into tomorrow's session as well. Let me just go through a couple of the questions that we have from some of the members of the community. One of them being Jerry92. Wanted to really know about Fibonacci retracement and how we can draw it. Well, let me just quickly go onto a blank chart for you and draw, hypothetical price action. Okay. The way that we would draw Fibonacci, Jerry, is always from the swing low to the swing high, or the swing high to the swing low. So what you've got to do is you've got to analyze. No worries, Dragon. Hope that helps. What you've got to do, Jerry92, is you need to get your Fibonacci tool loaded up on TradingView, which is on this left-hand side. It's there. It's called Fib Retracement. And when you draw that Fib Retracement, basically you're just drawing from, in the bullish market, the swing low all the way up to the swing high. Okay? And that's really all you're doing. Now, I actually think that we may have a lesson in the academy. Let me just quickly see if, because I know Shane likes to use his Fibonacci. Yeah. Shane uses it all the time, so make sure you check out his analysis. But yeah, that's essentially all we're doing. So in a bullish market, we're drawing the Fibonacci from the swing low all the way up to that swing high, just like that. Bearish market, swing high all the way down to the swing low. So you want to have the one at the point of where you draw it, if that makes sense. which is here. Hopefully that makes sense. Let me just do it on some live examples. So, on my NASDAQ, right, I'm looking for a buying opportunity. I'm drawing from this swing low up to here, this swing high. If you was going to draw your bearish Fibonacci, then you draw it from the swing high up here down to the swing low there. And then you're looking at these areas. If I double click on my settings, you're looking at these areas as, for me, the way that I use it, I use the 0, the 38.2, the 61.8, the 0.5 and the 1. And I really look to execute within these areas. So if I'm in a strong bullish market, I execute in this light blue area. And if we're in just a normal trending market, then I look to execute in this sort of golden area down here. And really the best thing to do is watch videos, search online, start drawing them. And also, guys, if you can't be bothered to draw them, if you go down here, you can go to an auto fib retracement. If you go type in auto fib, right, click that indicator, and it will draw the Fibonacci on it for you, which is quite cool. If you can't be bothered, if you don't want to do it yourself, you can. There are options to automate it. Universal, hello to you. Good to see you. Hope you're doing well, and thank you for the message. So yeah, US Open, fairly choppy start to some price action. We can see that US 30, that area that I'm looking for down at 40,200. I'm really just waiting for that, so I'm hoping the volatility can bring it down there. Let's have a look at the S&P 500. It's down 0.5% on the day. Again, yesterday there was quite a significant retracement really from these all-time highs. But I fail to believe, again, similar sort of thing. I want to target these all-time highs. I've been burnt trying to sell the stock market before. I'm not really that interested in doing it again, unless something materialistically changes in the economy, and that's that we're going to get a recession, which, yeah, people would argue that we might, and people have, but let's be honest, it's up in the air at the moment. We're not 100% sure if we're going to get a recession, and so I'd rather be on the bull side than the bear side. And I only want to be on the bear side unless I'm absolutely sure. And even if we do turn into a bear market and we do go into recession, will I be actively selling? I'm not sure. I think I'd rather try and catch the ride but on the way straight back up. It's just how these markets are engineered. It's not going to last. The downside isn't going to last forever, but the upside potential is limitless. Similar sort of thing though, you can see that 50% of the imbalance sits right in our sort of our area of execution. Again, fair value gap, 5,400, that sort of thing. That's the way that I'm looking to trade. I think I explained this before, Jerry, about the sessions. But essentially what we're talking about is, we're talking about different trading zones. Right? And so what you get is these sessions here. And I'm going to send these over to you. You get the London session, which will basically see increased volatility in the pound and the FTSE, and also the euro. You've got the New York session, which is likely to see volatility in US markets, which means gold, stocks, US stocks, and the dollar. Okay, and then you've got the Sydney session, which is going to impact the New Zealand dollar and the Australian dollar, and the Tokyo session, which will impact the Japanese yen and Asian stocks, right? And essentially in each of those sessions, what I've just sent you, those pairs, they're the ones that will see the most volatility. So did you notice that as the US opened for business, there was a spike, the volatility increased in the US stock market? That's essentially all we're saying. And so you have to pick your times that you want to trade. It doesn't mean you can't trade these markets in other time zones, but you're probably going to see a flatter market. For example, I'm not going to be actively trading the Australian dollar in the London session because it's likely that we're not going to see as many moves, shall we say. And that's the important thing to understand about different trading zones and different trading sessions. Thank you, Dan. Good stuff. I'm going to post the analysis for the S&P for the Nasdaq in the room, because I'm holding on to potentially getting a 50% retracement down in towards my area. So I'm still looking for that to take shape. So let me actually, whilst I'm here. Okay, I'm going to post that one in the room for everyone to benefit from, hopefully. Anitar239, do I have to have a lot of capital before I can be a profitable trader? No, you don't have to have a lot of capital to be a profitable trader. The more capital you've got, and if you're a profitable trader, the more money you're going to make, of course. You don't have to have a lot of capital to be profitable. What the best thing to do is become profitable first, then seek more capital. That's the best way to do it. Okay, good stuff. All right then. I'm not sure. Oh yeah, we've got 1 minute to go until the Canadian dollar interest rate decision, I think. Yes, and I'm interested in that. I'm interested to see what they're going to do. So let me just quickly run through that with you as the event comes out. We've got 30 seconds to go until that interest rate decision from the Bank of Canada. I'll probably see it on my Bloomberg behind me. Probably be coming up as well. So good luck if you have got any skin in the markets in the Canadian dollar like myself. But I'm going to block out the noise. My technicals are strong, so here we go. Slightly behind on the telly. Does anyone know the decision? Yes, they decided to cut rates. The Bank of Canada has cut rates for the third consecutive time. Another 0.25% lower. I imagine that's going to come up on my screen in a second. But yeah, okay, interesting. What impact does that have? I'm about to find out, I guess. A little bit of a spike lower. A bit of both sides. Nothing too drastic. I'm going to have to read their monetary policy statement to see how we go from here. I'm hoping for slightly something a bit more dovish, or whether they're going to potentially look at holding rates where they are at 4.25%. Remember, the Fed really needs to be playing catch up, which potentially puts my USD CAD in a little bit of trouble. But at the moment, I'm happy to hold that and keep that where it is, and really hold out for this one as well. Down, yeah, I was slow there. I don't know why I was so slow. Okay, so at 0.25%, I'll have to read the interest rate decision to see if anything comes of that. But yeah, we are moving slightly lower here, which is annoying me. That's fine. It's fine. I protected I had 1-to-1 on the trade from the daily order block anyway, so I'm not too interested in this noise. Let's let the market settle down first. Yeah, it was exactly that, Dan. It was already expected, so it's not likely. There's not a lot. It's already sort of been priced in, so it's just a bit of volatility off the back of the release, really. Okay, what I'm going to do, everyone, is I'm going to post that NASDAQ analysis in the room for you all, and hopefully you guys can benefit from that, and hopefully we can get a feel soon. It might not be today, and if you are trading today, good luck. Hopefully it's a good US session for you. I'll be back on tomorrow. One stream tomorrow, and then on Friday I'm doing 2 streams. And obviously Friday is the non-farm payrolls day, so it's gonna kick off on Friday. I can assure you that. So it's going to be a really interesting couple of days in the markets. And should anyone need me, feel free to get in touch. And until next time, trade well, trade safe, and I'll see you.